Today, I'm revealing my entire $50,000 dividend portfolio. So as it stands right now, I make $2,324 per year in dividend income. But gut check, just a year and a half ago, I made only $10 in dividend income. So in this video, I want to help inspire you to start dividend investing today. Whether you can only afford $10 a week or $1,000 a week, start dividend investing today for a wealthier tomorrow. So in this video, I am breaking down number one, last month's dividend payments. I got paid unlucky 13 paychecks from 13 different companies, and I'll explain exactly how I earned that 13 paychecks. Second up, I'm going to reveal my entire $50,000 portfolio, show you how that looks and what that's invested in. Number three, we're actually going to look at the most important thing, which is the future value of that $50,000 portfolio and how much money I'm going to make per year in dividend payments 5 years, 10 years, 15 years from today. And then number four, there's a mistake I caught as I reviewed my dividend portfolio, and I want to share that with you today and what moves I'm going to be looking into ASAP to counteract that. So as I mentioned, unlucky 13 paychecks from 13 different companies, and this month in particular, I made $175.63 in dividend payouts. Now, a lot of people could say, that isn't a whole lot of money. Why are you so excited about that? Well, right now, what I'm doing is I take that money and I reinvest it back into the dividends. And how that works is you have two different options when you invest. The very first one is you just take money and you invest it into a growth stock. And that could be something that doesn't pay a dividend, but you invest it and your hope is it'll grow over time. And here's the trick with that. You may get rich on paper, but you actually don't collect those funds unless you sell the shares of stock. With dividend paying stocks, however, when you invest and they pay you dividends, whether it's monthly or quarterly, which means every 3 months, that money is cash in your pocket. And there's two different ways you can treat those dividends. The very first one is you cash out the dividends and you use it for your everyday expenses. Or number two, my favorite part, especially if you're younger, is dividend reinvestments. What that means is as they pay you dividends in cash, you take that cash and reinvest it back into the company, which earns you more shares. And over the long period of time, as you continue to reinvest those dividends, you can really snowball up a huge portfolio almost passively in a sense, and it's kind of cool. This means your money continues to make you even more money while it makes you even more money after that, and in the long term makes you even more money. So let me start off with number one, and let's break down the 13 paychecks of this past month. I'm going to start off with my lowest portfolio, which is my Robinhood account. So here we are in the Robinhood portfolio, and you can see got 1,177 invested so far, so not a whole lot. So you can see for all time, I'm up 56.4%, not too bad. On that portfolio. In order to find your dividends in Robinhood, you just go down to the bottom and under your account, click on statements and history, and then what I'm going to do is click show more and then hit dividends. And this is my current dividends. Now I have two pending that are about to get paid out in just a few days, and then I have the past 30 days. So let's break this down. Very first one, as you can see, there's AGNC, which is $1.45. I then have STAG at 63 cents. I have Bank of America, and you can see it says reinvesting. That means I'm reinvesting those dividends of 36 cents. So that's not a whole lot, but that's a little bit of money, and over time, that'll continue to snowball up. And then last but not least, I got Coca-Cola paying out a dividend of $2.10. Now, one thing to keep in mind, Coca-Cola and Bank of America, they pay every quarter. And again, that means every 3 months, they pay out dividends. The other ones, STAG and AGNC, they pay every single month. In fact, if you look down below here, you can see them right below on May 17th and May 11th, paid out 35 cents on STAG and $1.44 on AGNC. And then here we are again on June 9th and June 15th. Next month, more money. So that means in July, and as we continue to go on, as long as I hold these stocks and I don't sell them, I'm gonna get dividends every month on those particular stocks. Next up, let's talk about Stash. This is my Stash account, and Stash is kind of that first investment app that I ever used. In fact, that's what the $10 per year in dividend income originally came from a year and a half ago with Stash. And now it's exciting to see that that has scaled up significantly as a result of my investment activity. But here's what we got going on in Stash. Not a whole lot this month, but we have a reinvested dividend back on June 7th at 12 cents from Conservative Mix, ticker symbol AOK. Then I have a dividend from Corporate Cannabis, that is ticker symbol MJ, at 78 cents, so that's kind of cool. Now I want to take you over to my Webull account. Now this is the second of my 2 largest accounts. By the way, in today's video, I'm not going to go over my IRAs, my retirement accounts, my 401ks, my Roth. All of that stuff does have dividends in it, but I'm just breaking down my taxable brokerage accounts. But look at this here in Webull. We got 20,894 going on in this particular account. If I hop over to history, to dividend records, there we are. Now this is for this month. And I actually have some pending. In fact, I think they hit the count today, which I'll get to in just a moment. But you can see I got some on PFF. On 6/7, I got $7.82. Walgreens, $4.68. And then Realty Income, one of my favorite REITs, $17.63. Now keep in mind that and PFF, they pay monthly dividends, whereas Walgreens Boots, they pay quarterly. There are another one, SPHD will pay me today. Let me actually filter this to 3 months so I can kind of show you what that is. So you can see back on 5/28, they paid a total of $5.93, and then KBWY at $10.79. Now, I haven't talked about this account, but I do also have a Charles Schwab account. And I want to break that down today too, because I started dividend investing. Now, I have some really unique holdings in my Schwab account. One is what we call a BDC. And then number 2 is a unique alternative fund. So let's start with number 1, and that is Main. Ticker symbol MAIN, Main Street Capital, paid me a total of $64.49 in dividends. So as you can tell, of my $175 that I earned this month, that is the one that's probably making up most of that dividend payout. But that's because I own a significant amount of shares of Main Street Capital. They pay every single month. And what's really nice about that is I had some extra cash as a result of the lockdown from last year. I started shoving away my money into a savings account. But this was not emergency fund money. This was just extra money to weather the storm of the pandemic. So what I did is I said, okay, well, right now things are getting better. And this money is stored up into a savings account that's only paying 0.04% in interest. That's like nothing. But Main Street Capital, I could take that and invest it because this isn't money that I really need. And at this point, now that things are starting to get a little bit better, if it drops in value, it's not going to hurt my budget. Never invest money that you're not willing to lose. So that one's pretty cool. I then had some extra cash also that I wanted to invest in NUSI. Now this is a really interesting covered call ETF. And this one also pays you monthly dividends. What was really cool about this is I actually just purchased this ETF and I was not looking at what we call the ex-dividend date. I was just simply saying, okay, time to move my money into this particular ETF. What's really cool about that is I bought them on 6/22, June 22nd. And then that was actually a day before the ex-dividend date, which means that anytime that you own shares during the ex-dividend date, they tally up everybody that owns the shares, and those are the people that get paid the dividend that month. So what was really cool is I didn't realize that the ex-dividend date fell on the day after I purchased the shares. And because they have such a quick turnaround from the ex-dividend date to the payment date, I was surprised to see that I actually made $58.85. And I literally just bought this ETF on 6/22. So that was kind of cool. But that totals up obviously a significant amount of my $175 Paychecks in this past month. But let's talk about the reveal of the $50,000 portfolio. And this is where I really want to inspire you to start investing. Now, I have a bunch of referral links in the description below. Get yourself started with whatever favorite brokerage you want to get started with. It doesn't really matter, but you're going to notice that I indicated that they give you free stocks or free money to invest with when you sign up. And that's like getting free money to get started. So what I would recommend is hop down below, check that out, and then start your investment journey, even if it's only $5 or $10 a week. So here is my $50,000 portfolio. Now, of this $50,000, there are some stocks and ETFs that don't pay a huge dividend. Maybe it's a really small little dividend. For example, Apple, they pay a dividend, but it's not a whole lot of money. So what's really nice is they just updated this website since the last time I did a video on my portfolio update. But look at this, dividend yield of 4.62%. And you can see right over here, the annual income right now that I'm making is $2,324. That's my annual income as a result of all of these investments I've been making. Now, I have been doing a lot of side hustles. Thanks to all of you awesome supporters here on YouTube. My YouTube revenue is starting to really grow. There's a lot of things going on. And so I'm getting a lot of inflow of cash, which is great, so I can continue to invest it. And I recommend you do the same thing. Don't just rely on your job income. find other opportunities to create multiple streams of income that you can reinvest here into the stock market and then grow this annual income of your dividends higher and higher and higher. That's what's so cool about doing the right things with your money. But I gotta tell you something, there's a lot more money that I wish I could invest. I would love to make this $50,000 $100,000. And in order to do that, I gotta first take an important step. And this is something that I wanna do. And I gotta come straightforward. I gotta explain this to you guys because I know you appreciate when I'm transparent, but I really wanna pay off my house early. So we have quite a large mortgage balance. We started with a $300,000 mortgage balance. And right now we're quite low on that, and we're continuing to chip away at that. But a lot of my revenue, a lot of my profit that I'm earning is going toward paying off my house. I want to pay off my house early. And the reason for that is I just want to be completely and utterly debt-free. I don't want to owe a dime to anybody. And as a result of that, that takes away the risk of the mortgage payment every single month. How cool would it be to live for free? No rent, no mortgage, no nothing. Now, a lot of people would disagree with me and say, well, you should invest in here because typically the stock market over the last 90 years has grown at an average rate of 10%. And you probably have a mortgage interest rate a lot lower than 10%. So why not just keep it the way it is and invest more money? And that does make sense on paper, but for me, it's about the risk. I want to be able to, if all hell breaks loose and all of a sudden all of my income drops, I don't want to have the risk of foreclosure. I don't want to have the risk of having to deal with that monthly payment. I want to be able to say, you know what? I could pick up a job at Starbucks and still be okay. That makes me sleep well at night. Comment down below if you guys are interested in learning about how I'm strategizing my income in order to pay off my mortgage aggressively. In fact, in the next 2 years, we're going to be paid off. Comment down below and I will share some additional video content on my mortgage payoff. So here's how this is broken up. You can see at the top, I have my Robinhood, Schwab, Stash, and Webull accounts. That's what makes up the $50,000. And that's what's so cool about Track Your Dividends. And this is a free website. I don't pay for the upgrades here. This is taking everything and putting it together so you can see your entire portfolio, no matter how many brokerages you have, right in a nice little snapshot. Here's what I'm invested in. There's all kinds of different things as you can see here. And if I wanted to, I could actually scroll up here and click on my individual. You can see my Schwab account has 24 and go over to Stash at 4,000. I can go over to my Webull and then you can see what your dividend yield is on each individual brokerage that adds up to your summary percentage. So you can see here in Webull, I got a 3.42, 1.04 in Stash. Schwab is probably a little heavy. Yep, Schwab's gonna be heavy at 6.22 because of those BDCs and REITs I got going on in there. And then you got Robinhood at 5.5, which is what makes up my 4.62%. But here's the next step. Let's move on to number 3. And this is the most important thing when it comes down to inspiring you, and that's the future value right up here at the top. I'm gonna click on future value and get ready, guys, because this is what gets me fired up. When we look at this, it's saying in the next 10 years, actually less than 10 years, in 2030, my ending value is going to be $100,000. Now, that means I stop investing today. No more money, only dividend reinvestments. I'm not going to invest a single dollar into any one of these brokerages ever again. I'm going to stop. I'm going to put all my money under the mattress of my bedroom, and that's all I'm doing. I'm still going to grow by $50,000 over these course of the next 9 years to get me to $100,000 of my portfolio balance. That's kind of cool, isn't it? That is basically a prediction on the growth. They're thinking that these stocks are going to grow, these ETFs are going to grow, and on top of that, your dividend growth rate is going to grow, which means the companies want to continue to pay you more and more dividends because that means they're more and more profitable. And as a result of that, your entire portfolio continues to lift. That's pretty darn cool. So that's step 1, which is exciting. But then let's take a look at this annual income here. If you look over here in 2030, if I click on the blue bar, it comes up and tells me my annual income will be $7,706. So I've gone from $2,000 today to $7,000 in 2030. And that's without doing anything. I quit the stock market. And if I quit the stock market, that's what I can look forward to in the future. But you know I'm not going to, right? You know I'm not going to. And especially once the mortgage is paid off, just think what's gonna happen. I'm gonna take all that extra cash and I'm gonna start dumping it into this. We're going all in, guys, and I want you to join me on this journey to building our ultimate sweet life. As a result of that, this becomes, I don't know, $60,000 a year, $100,000 a year in dividend payouts. That's what I want. Think about this from this perspective. You got Social Security, you got 401ks, you got all of these different retirement options, right? And they're programmed for you to retire at the age of 65 to 70. But I want to flip that on its head, especially if you're a younger person. If you're in your 20s or even less, if you're 18 years old, you could start today with a little bit of money and start building that up, that you then have the power to retire early if you want to, knowing that you have safe investments investments that are going to continue to grow over time. And as a result, you also get dividend payouts. So imagine if you're making $60,000 a year in dividend payouts. And on top of that, you get a growth rate of the average of a 10%, even if it's only 6% growth. You're going to get growth on top of dividends. So if you need your money for your expenses, you withdraw at what they call the 4% rule. Now the 4% rule means you're bringing down your account a little bit once you build it up. You bring down your account by about 4% a year, but because the stock market is growing at 10% or even 8% or even 6%, you're still growing your portfolio while at the same time you're taking just a little bit out in order to live. Now, in order to calculate your FIRE number, you need to understand what your yearly expenses are going to be, so that way you have a big enough portfolio to support you through the long period of retirement, especially if you retire early at the age of 35 or 40 and you got to live out to maybe even 100 years old. I hope you live to 100 years old because that would be super awesome, and at the same time you need enough money to coast all the way to 100. So here's, and I want to say it's a mistake because it's not really a mistake. It's more about looking into what am I doing in my portfolio? How am I happy with my investment spread? And some of you may disagree with what I got going on. And here's what I noticed. I am a little bit REIT heavy, real estate investment trust. These are typically attractive because they pay a high dividend, and at the same time, some of them pay a lot of monthly dividends. But I noticed, okay, I have STAG, I have AGNC, I have Realty Income, I have even an ETF dedicated to REITs, and I have a business development company. So I got a BDC, which is taxed the same way as REITs. There's a lot of stuff going on here with a lot of these different type of stocks. I need to make sure I diversify a little bit more. The goal here, guys, is to diversify your sectors. You want to be able to say, I have so much in industrials, I have so much in technology, I have so much here and so much there. You don't want to put all your eggs into one sector basket, because that way, if that sector starts having a little bit of a downturn, like big tech did over this past year, you want to be able to balance that out. You want to have a portfolio that lets you coast your way into the wealth that you deserve. I'm going to probably do some trades out of some ETFs. Now, I don't usually sell. I'm not a big seller because if you sell, what are you doing? You're just trying to like profit off of the short term. But if you want to be a millionaire, you got to profit off the long term. So I'm looking into, okay, well, I want to rebalance this a little bit by taking some of that out of REITs and maybe reinvesting that into a different type of sector that maybe I'm a little bit lighter in. So that way I have the balance of diversification. Here's a video that you might like, and here's a video that YouTube thinks you're going to like. And until next time, we'll see you on the next video and continue to live your sweet life.